Only English. It's only in English. Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest trends on the stock markets. Well, the markets are trading subdued at this point in time. 432 points down for the Sensex. 60,862 is the current level. The Nifty is trading at 18,100 levels. That's down by about 130, and that's due to the kind of weak global cues that we were given as a handover from the US markets and then the Asian markets in the beginning as well. But there are some bright spots in the market, and we are seeing some debut performers as well. Radiant Cash Management is in fact the first stock to be listed on the exchanges in the new year 2023. The shares of this Chennai-based Radiant Cash Management Services made a decent debut on the BSE and the NSE. There was a 10% premium at which the stock got listed against the issue price of 99, and we did see the stock listing at about 103 rupees odd on the National Stock Exchange. That's about a 10% premium, and this is despite the IPO not getting fully subscribed, as it received only 53% subscription from the investors. So this is a big positive. Now, to discuss the future prospects of the company going forward, I'm now joined by the top management of the company. Colonel David Devasam joins in. He's the chairman and managing director at Radiant Cash Management Services Limited. Welcome, Colonel David, and thank you so much for taking the time out for this discussion. Well, let me start by saying a Happy New Year to you, and it's indeed a Happy New Year one for you. You've seen a 10% premium listing on the company too. So help me understand, first of all, why was the issue not subscribed fully? And then why was the issue size really reduced? Was it due to the volatile nature of the markets? Was it due to the lower subscription figures? What exactly is the reason? How should the investors really understand this? Colonel David, can you hear me?
Now I can. Thank
Okay,
you.
now, so basically my first question to you was, I started by saying a Happy New Year to you, and indeed a Happy New Year one for you, because your company has listed on a premium today, and that's despite the overall muted trend that we have seen on the stock market. So a 10% premium despite the overall mood, and also as a positive surprise because the subscription figures were lower, and there was the grey market premium that was suggesting perhaps a discounted listing, but you have actually surpassed those expectations right there. Help me understand what's really moving the markets right now and the stock right now, and what was the reason why the subscription figures was low, and then you had to reduce the issue size as well?
Well, Jai Hind, India, and I'm a different kind of businessman because I served in the Indian infantry for 25 years. And after that, came out and set up the Radiant Cash Management Services with a focus on retail cash management. So, and the last 17 and a half years, so we could take the company public. So,
Yes.
I think that is a story for all our young people, that this is a beautiful country, it's a great opportunity. So just, you got to believe in the country, and, the best things happen. And also today, despite the other trends in the stock market, the way the company has been accepted and is trading at a premium, it's a very positive and satisfying moment for me at this point of time.
Absolutely. And, it's an honor to be speaking to you, somebody who's served in the defense for the last 25 years as well. How did the interest really emerge in the stock markets for you? Were you always interested there? Were you always in sync with the financing and, the news regarding business news? Was that always of interest to you?
Not at all, not at all. In fact, just before I walked out of the army, I first learned what is the meaning of equity.
Oh,
which was told
okay.
to me, just told to me by my chartered accountant. So, and then
Okay.
jokingly, when we were driving out after I had taken voluntary retirement, and my wife joked with me and she said, "One day I want you to take your company public, and I want Shah Rukh Khan to come and ring the bell."
Okay. Did he
So
come
I
and ring the bell today?
so,
No.
so I mean, we did take the company public, but well, I had to be the Shah Rukh Khans he had to be satisfied with, for the time
Yeah,
being.
perhaps the Shah Rukh Khans of the stock markets, the retail investors have given you a thumbs up right there, so she should be happy with that. But
Yeah.
help me understand now, going forward from here, how do you really, use the proceeds from the fresh issue? I mean, like that was also reduced. The size for the fresh issue also was reduced from 60 to 54 crores. How are you planning to use those?
Uh, you see that I like to explain the business because it's very important. It's a very low profile back end business. Retail cash management is a reverse cash cycle. That is,
Yeah.
after the body public gets the money, then they spend it in various outlets. It could be payment of school fees, college fees, payment in pharmacies, hospitals, and cash on delivery. These are all different ways in which the cash gets back into the system, and then it gets collected at outlets.
Hmm.
So retail cash management companies like us, we do the reverse cash cycle, and we pick up the cash from there, we sort it out, and thereafter then we deposit it back in the banks. So each outlet, as I mentioned, it could be a place, a school counter, or whatever. Today, the entire industry together is doing 1.4 lakh outlets.
Hmm.
Well, as per the Frost and Sullivan report, the available opportunity is 30 lakh outlets. So it's a humongous opportunity. And we are doing 55,000 outlets as of now across the country. We have functional 13,000 plus PIN codes in 5,300 locations across the country. So it's a great feeling that in over 13,000 PIN codes, our countrymen hand over their cash to us for management, trustingly.
Yeah.
And so an important USP that we have is that 21%
Hmm.
of workforce, including the leadership. That's why you'll find me very proudly wearing my medals today.
Mm-hmm.
You know, you can see that that's
Absolutely.
because 21% of our entire workforce, including the leadership, is ex-service, and we are very proud of that. So
Yeah.
we carry out our duties with a lot of honor, with a lot of commitment,
Integrity.
integrity,
Hmm.
and discipline, and also frugality. That's one of the reasons we are the best ROE and ROC numbers in the industry. And we've been a dividend-paying company for the last 3 years, and we look forward to maintain that track record. So
So what sort of dividends can we expect for this financial year and the next? If you could give us some guidelines into that. All right, I believe there's some technical glitch, and we'll try to connect back with him. But clearly from the armed forces, complete move into the stock exchanges, getting his company to become public. But just like how he was pointing out, it's all about the cash management right there. And I'll also help you understand a little bit more about the company in the meanwhile we try and connect with him. So the company really operates across 5 verticals. There's a cash pickup, delivery, there's network currency management, which is also known as cash burial in the industrial parlance as well. There's cash processing that the company works with. There's cash vans and cash in transit, and other value-added services that the company really does with. Look at the kind of stock movement right now. It's over 16% of an up move. So apart from that 10% premium listing that we saw, the stock is continuously moving higher. And that's despite the lower subscription figures. Remember, the company, the IPO had got only 53% subscription. Half of the issue size was subscribed. And they had also reduced the issue size from 387 crores to 256 crore rupees. The fresh issue was reduced from 60 crores to 54 crores. And the offer of sale was also reduced to about 202 crore rupees. I guess we do have Colonel David back with us. Colonel David, you were talking about how you are pretty proud about the workforce that you have at your company. Most of them are ex-servicemen, and you do value the way in which you've been handling your businesses. There's a lot of governance that we can really expect from there, integrity that we can expect, and shareholders can expect. Large part of your this IPO has been an OFS, and a very small portion is the fresh issue right there. For retail investors and for the shareholders, prospective investors, what would you really tell them? Why should they be looking at becoming a shareholder of this company?
Well, firstly, I'd like to say that we are a dividend-paying company, that we've had a track record for the last 3 years, that we hope to maintain that track record in the future as well. And, we are at the threshold of a very large opportunity, and the organic growth itself is almost driving us close to 22 to 24% annualized, growth that is happening. Secondly, this is an annuity business. The customers who signed up with us in 2006 are still our customers.
Yeah.
So it's just, the business continues, right? There are customers who signed up then, and they're still continuing to be our satisfied customers.
Right. So what kind of dividends can we really expect for the current financial year and for the next?
Well, I've been told not to put a number to it, but definitely I think it should be in excess of 30%.
Okay. And also, the company works largely in 5 verticals. There is cash pickup and delivery, there is network currency management, there is cash vans, and you also work with the value-added services, cash processing as well. Which of these do you say will be the key growth drivers for you going forward?
We have, one is cash pickup accounts for about 67% of our business, and network cash management 24%. We are seeing a very positive growth in network cash management right now, and that is
Yeah.
also a more lucrative segment. So I think it's going to balance out by about 60% would be in the pickup segment, and going forward to about 30% in network cash management, which bodes well for the company in the future.
Right. And could you also share some business growth outlook in terms of revenue and margins going forward from here?
Um, well, the first quarter is an indicator. It would not be correct on my part to talk about the second and third quarter where the auditor returns are still not been filed. But I'm looking at that, and normally, as you know, in most businesses, the first quarter is always the weak quarter. So in the first quarter, we have an EBITDA margin of close to 26% and a PAT percentage of 18%. So I think
Would you
that's
be able
what
to sustain that?
we hope to. We are sustaining it. I can see that happening, and we hope to sustain it in the future as well.
Okay, and in terms of revenue mix and geographical mix, you did talk about that there is substantial growth opportunity for you currently. Where do you see the large part of your revenue coming in from in terms of geographies and in terms of verticals as well?
Well, the surprising part is pretty widely spread. We are across the country now, and the only place where we are not working is Lakshadweep. And my direct operations tells me that from there also there's a demand of a cash van, so we're just wondering how to logistically move it across
Yeah.
by a vessel. So it is a uniform spread, but to put a sense to what you're asking, South India and West India, that is including Gujarat, accounts for a sizable portion of our, percentage-wise, but it's evenly balanced. It's only because not much work is happening in other places, other geographies. But otherwise, we are completely spread. I said 13,000 plus pin codes out of 18,000 pin codes. So it's a complete spread.
And in terms of market share, I mean, I do not really know if there are other listed peers in your segment right here, or if you are the first one over here. But largely in terms of market share, what is the kind of market share that you hold in the segments that you work in, and how do you plan to scale it up?
Well, currently we are market leaders in this in retail cash management. The entire industry together, as I said, is doing about 1.4 lakh outlets. We do 55,000 outlets in that. So that roughly translates to close to 40% of the national market share. So this we hope to now retain and sustain over time.
Okay. And in terms of expansion, any plans to go international? And for that, in case you're looking at any more fundraise?
Currently, we have no international plans. The country itself is a huge, humongous opportunity. That's what I like to say, that our markets are so strong, and it's growing at such a rapid pace that we have to, match up, and it's not the other way around. Currently, we have no international plans as such.
Okay. And which are the biggest challenges as of now for you, and how do you plan to mitigate them?
The biggest challenge, globally that people face in cash management is the risk factors which are involved. It could be fidelity risk, it can be risk due to other factors, extraneous factors.
Yeah.
So we have managed that very well in our organization, in the sense that we have the risk management team headed by Director General of Police. Every single segment of cash that is moved, that is completely insured. Then I have risk managers who are all former junior commissioned officers of the army, or they are ex-police inspectors.
Mm.
So we keep in, so as a consequence, just to give you a sense of the numbers, last year we moved 1,30,000 crores, and the total cash loss, gross cash loss, was 2.76 crores. So of that, so finally what hit the P&L was just about less than a crore. So you can just imagine the quality of our risk. We are immensely proud of that. And our men do their work with immense, degree of dedication and honor and commitment and integrity. And that's the DNA of our company as of now. And that's the reason why we have such good results. That's the key risk in cash management. I think that we have mitigated it fairly well.
Okay. Is moving to a cashless economy in the longer run that the government really hopes to achieve any kind of a risk that you perceive?
No, firstly, there's a lot of this question keeps coming up, but it's very good that digitization is happening, because currently, as per Frost and Sullivan report, we're just 11% digitized, while compared to the US, the most developed economy, which is 72% digitized. But let me tell you, even there, 28% is cash. What I would like the viewers to understand is that cash is a commodity. How does it come to me? It comes to me in a sealed bag. The cash comes in a sealed bag, and every outlet, unless it's 100% digitized, there'll always be some amount of cash component being generated. So currently, the body public, which is a very correct step, they must have options. You want to transact digitally, you should have a digital transaction option. You want to transact in cash, you should have a cash transaction option. And cash is very strong in our economy. We were at 13.6 lakh crores in 2016. Today, 31.5 lakh crores. That's the cash in circulation. And it's likely to grow to 41.5 lakh crores by 2025, as per Frost and Sullivan report.
Okay.
So that is
Okay.
40% of the GDP is cash. So, it bodes well for the cash management industry.
Okay, all right. On that note, very many thanks, Colonel David, for being with us and sharing all these insights about the company's growth outlook going forward. And here's wishing you all the very best to your, what journey that you've kick-started. The stock is up 16% on day one. Here's to, more wealth creation for you and for the shareholders and investors as well. Many thanks for joining us. Happy New Year once again.
Happy New Year to you all. And I'd like young people to draw from this story. Anytime. I was 45 when I started business. I learned equity at 44. So,
Absolutely.
and that's this beautiful country with a huge amount of energy. Please do continue, do make business, your entrepreneurs buy. This is a beautiful country. That's all I'd like to say. Jai Hind, India.
Many thanks, Jai Hind. And with that, let's quickly look at how the markets are trading at this point in time as well. 60,769. There's a cut of 527 points, so the markets are drifting lower as we speak. 18,075 for the Nifty right now. 157 points gone there. Let's also delve a little deeper as well. 18,000, so 160 points gone there for the Nifty. In fact, if you look at the sectors as well, all the sectors, in fact, are in the red. So which are the sectors that are actually dragging the most? 2% down for the realty, 1.7% down for the PSU banks, metals down by 1.7%, over a percent cut for the IT space. Then you do have about a 0.8% cut for the banks, for autos, for financial services, 0.6% down for the FMCG as well. Pharma space absolutely flat at this point in time, the least affected, in fact, in terms of the kind of downward move that we are seeing. Advanced decline ratio clearly favoring towards the declines. 42 stocks in the red, whereas 8 stocks in the advancing category, which are the stocks that are creating maximum pressure. Metals, Hindalco, JSW Steel down in trade. Coal India down by 3.3%. ONGC, IndusInd Bank, the other drags at this point in time. Talk about the movers on the upside, those stocks that are performing in an otherwise weaker market. Divi's Laboratories, the one that was tracking yesterday, is seeing some shorts being covered. Ultratech Cement, HDFC Life, SBI Life and Sun Pharma. Slight gains in the pharma pack is what you can really spot. But the broader markets also down in the red. Over a percent cut for both the mid and the small caps. So doing, underperforming the benchmarks at this point in time. The India VIX has shot up 6.6%, 15.3. Keep an eye out on that. That could indicate some more volatility as we move along as well. So we'll keep an eye out on how the markets is moving going forward from here. You did hear the management of Radiant Cash. Quite positive outlook is what they have going forward from here. No impact from the cashless economy is what they anticipate. They do expect the cash circulation in the economy to rise further from here. And they're also positive in, talking about how they will be continuously giving out dividends as they have been in the last 3 years. So for the new shareholders as well, this could be definitely a positive as well. But in case you're looking as a fresh perspective to take a view on investing in this company, do speak to your financial advisor as well. And with that, we wrap up this edition. Many thanks for joining us, but do stay tuned on to Business Today TV to catch all the latest updates from the world of business and stock markets. Many thanks for joining us on this one.